Hello everyone, today I would like to talk about perception. According to Napoleon, how we perceive events is more important than the facts. And this is currently illustrated in financial markets. Very recently, Mr. Powell said that some parts of the economy will remain at risk as long as people won't feel safe. And it's interesting that he said feel safe and not be safe. And this is mirrored currently in financial markets because markets think that the Fed will buy bonds, but actually it hasn't yet bought single lines of bonds. And even if the hopes of a V-shaped recovery of the economy are fading, they have come true for financial markets. Credit markets are booming. They have a tremendous appetite for new issues, and they are kind of doing the work of the central bank by buying all this debt. Since the end of March 23rd until the end of May, it's $733 billion of new debt that has been issued. And probably this trend will continue if we look first at the collapse in the concession premiums and also on how difficult it is to buy those bonds in the secondary market. So people are keeping them and not flipping them. On this side of the pond, there's been a rally as well, even if the second part of the V is less advanced for European market, but we also have a boom in the new issues. Why? Because there's this perspective of an European recovery fund and also hopes around the fiscal response. And this is feeding the sentiment. But here it's not only about perception, because the ECB is concretely buying bonds under its EPP program. And just to give an example of the enthusiasm, one day before the June ECB meeting, Italy came to the market for a new bond, which was quite brave. And this daring has paid off because Italy is now the issuer who has the record of the heaviest demand for a new bond, with 108 billion euros demand. So, where do we stand now? Both central bank, ECB and Fed, have things in common. They say the price of financial asset is not a concern for them, and they are not today at full speed of what they could do. And still, financial markets are booming. Why? It's because this super important asset for a central bank is doing its work. It's the credibility. And currently, financial markets perceive this credibility more than the facts. So let's hope they're right and that further down the road, we won't think financial markets were making credulity. Thank you.